Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Thursday, January 8th, and my name is Raleigh White, and I'm coming to you live from an overcast day here in Austin, Texas, and I am going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics, including why small caps don't correlate with large caps, why small caps are not influenced by institutions. He's also going to cover questions on the key confirmation setups he uses when trading small caps. Then he's going to give us a midday market update and the top stocks that he's looking at right now. He's going to do a market analysis and what we can expect this quarter as we start our earnings season. And then, as a bonus, he's going to give us a deep dive technical analysis of every major sector. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with his presentation. Now, remember, folks, that the chat room is open to everyone, and we do have some ground rules. If you are going to be posting, always be kind and supportive. Also, folks, please keep to the topic. No political discussions allowed whatsoever. And please, please keep your side conversations to a minimum so that the rest of us can focus on the education and the information that Roger's going to be sharing with us, because he is here to go ahead and give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. Now, for those of you that joined us this morning for Roger's pre-market briefing, you'll note that there were several key catalysts that we needed to be aware of. On the tech front, we noted that Google was coming into the open up 1%. Also in Infotech, we saw that Intuit was coming into the open down 1%. Now, on the defensive front, we have NOC, which was up 7%, and Lockheed Martin, which was up 6%. On consumers, we noted the Constellation brands STZ were up 2%. On the international front, Japan's Nikkei was down 1.6%, coming off of its all-time highs from 2 days ago. And then on the Fed front, we knew that we had jobless claims that were coming out, and we had delayed reports today on productivity and wholesale inventories. Now, for those of you that are wondering, why do we even talk about these catalysts? Well, from Roger's perspective, information that is either known or will become known during today's trading session, but is not yet priced in the market. These are volatility flashpoints. And so we just need to be aware of what these catalysts are as we consider trading stocks that might be associated with those catalysts. Now, as far as his pre-market stock watch list is concerned, these are the large caps that he has his eye on. And we note here that I guess my numbers here must be wrong. But anyway, we had several shorts on our list today. Wait a minute, this slide is not correct. Huh. Okay, you know what I'm going to do? I'm going to fix this right now, live and in real time. This is from yesterday. Oops. Back off for a minute here. Just take a second, folks. I'm just going to update this in real time. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. You'd think I'd never done this before. And then as far as the longs are concerned, let me put these here. Sorry about this, folks. I'm normally a little bit more organized than this. I'm going to blame this on a head cold. Yep, that's what I'm doing. That's my story. Not that. That's my story, and I'm sticking to it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Man, a lot of stocks were on Roger's watch list today. As a matter of fact, you can see there were 28. Now, anything that was denoted with an asterisk, like BBY, LEN, ENRC, DVA, this means that these were A-line. So these were A-line shorts that Roger identified for us. And in today's session, Roger basically showed us live how he finds these particular stocks. And so for those of us that were with us there, I thought it was kind of cool to see how he basically sorts through the stocks to make his selections. And then on the long front, we only noted one was an A line, that was Google, and then the others were here. So these are on his watch list. That does mean, once again, that these are stocks that Roger's going to be keeping a keen eye on. And if any of these stocks meet his criteria, more than likely they will be posted as trades in the trading pit or in other of his alert services that he has. But this is what he shared with us this morning. And then, as far as his pre-market comments are concerned, well, we did note that the futures markets were slightly down, coming into the markets. Let me see. What, you know, guys, I don't know what I'm thinking here. I apologize once again. I am going to go ahead and update. This is from yesterday. This is today's. Okay, so let me just clean this up a little bit. Anyway, you can see this is live. Oh my gosh. Let me see here. View slideshow. We'll make it bigger. There we go. Now everything's in order. Yeah, I'm going to blame it on Clyde or whatnot. But anyway, I apologize. What I normally do is I organize myself on a separate Word document. I collect all my thoughts and then I copy and paste them into the presentation. I obviously forgot to copy and paste. But as far as his pre-markets, we noted what. Mm, 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 Anyway, from once again, so what we saw this morning coming into the open was that the markets were all slightly down. Okay, and he wasn't surprised because as he shared with us yesterday, he felt that stocks were a bit overblown and he expected there to be a cooling off period. We noted that it was a two-sided market. Okay, that we were looking at today because the number of stocks that were making 20-day highs were down significantly from yesterday and about equal with those that were having 20-day lows. We also noted that bonds remained basically stubbornly low down in their range. It didn't seem to give us any precursor that there might be a move up in bonds, which could actually push these stocks and indexes, which after all are all sitting right below record highs. We noted that the VIX, for example, remained to be low in its range, but Roger's expecting a bounce. It's sitting right around 15 now. He's expecting that it's going to bounce higher as a reversion into the mean. As far as looking at the markets, he expected the indexes today would all be right around, the SPY would be right around the 8-day moving average and consolidating sideways. And he expects this is basically a wait and see at this point in time until we start to get into earnings. So once again, those were what he was looking at. He felt that the markets were pretty choppy, pretty dicey. He did recommend caution as to what we're doing and stick to your guns. You all have trading plans that work. Stick to your plans. Look for confirmations. When you see something, just don't jump at it. Okay. Don't, fall for false breakouts. Wait for the confirmation that you're trained and you know how to wait for, and then consider those trades. And as far as today's agenda is concerned, once again, we're delighted to have you here with us. Roger's going to be talking about, several things. He's going to be talking about why small caps, for example, don't correlate with large caps whatsoever. He's also going to share why large caps are not influenced by institutions. And he's going to cover questions that have come up from people to just re-review the key confirmation setups that he's looking for when trading these small caps. He's also going to give us a midday market update on the top stocks that he is looking at right now. He's going to do a market analysis and what he expects as we come into earnings. We're right now at earnings. These will be earnings from the fourth quarter of 2025, and that season is just starting to open up. And then as a bonus, he's going to do a deep dive technical analysis into each one of the major sectors. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember that the chat is open to everyone and we do have some ground rules. Always be kind, okay? Number two, please keep to the topic. Number three, no political discussions allowed whatsoever. Also, keep your side conversations to a bare minimum so that the rest of us can focus on the education and the information that Roger is going to be providing, because he's here to give us an edge in the market and to help us all become much more confident and consistent in our trading activities. And with that, folks, let's go ahead and say hi to Roger. Let's say hi to Matt. Gentlemen, it's nice to see you. Look at Roger looking fresh. Holy
Thank you.
smoke. Love what your barber has done. Look, you know, it's going to shave 2 seconds off your butterfly. That's what I'm saying.
Oh man. Yeah, she felt bad for me. She's like, next time they can't, I'm overbooked or I'm on holiday. Here's my phone number. Just call me. You're so fat. She's like, it takes me 5 minutes to do your haircut. She's like, because she does ladies and she does these long hairs and all that. She's like, I'll squeeze you in anytime. She felt bad for me. She's like, you got stuff growing in your hair. You got so much hair.
Well, Roger, you look great.
Thank
And
you.
what an interesting day today. I mean, the markets are interesting, and you're right. I guess, volume's starting to come back into the market. The institutions are starting to come back in. The holiday season is behind us, and we're right on the verge of earnings season. So
Yes.
here's where we are right now. Hey, let me start by saying, any surprises this morning based on what you saw pre-market versus where we are right now?
Any surprises? No surprise. The only surprise is I was expecting price action to be a little more volatile.
Hmm.
It's behaving. I mean, price here. Let me just show you this. Price action is behaving like it's holiday. This is holiday price action right here.
Okay.
And I would think this price action would be much more earlier in the week than this. We're now in. I mean, people are back. People are back at work. We're now in the new year, and this price action is just horrific price action in the SPY on an intraday basis. On a daily basis, I really like what I'm seeing here. I like how we're bouncing off the 8-day. We're seeing a lot of confirmation there. That's a very, very powerful. That to me is very nice. This looks very, very nice to me, and I think it should continue moving higher. I would be really surprised because it's already well into. If it was 10 in the morning, I wouldn't say what I'm about to say, but because it's already second half of the day and the market has set its tone, and we have been above the VWAP pretty much the entire day, and internals are looking fantastic. They're actually ADD's over 1,000 up. So,
Oh, wow.
I would be surprised if we broke down, and I would not be surprised if we broke above this. Okay, and mega caps are doing nothing today. So we're having another sector rotation. Raleigh, what's interesting is 2 years ago, 4 years ago, we would have sector rotations every 3 months.
I know.
Now we're having sector rotations every 3 days.
Yeah, I was going to
Um,
say, Roger, it's spastic the way it moves. Yep.
yeah. So it's definitely something. It's definitely something we have to be, mindful of. But in terms of volume, let me just take a look at TC 2000 here. In terms of volume, we're doing okay on volume. We're not that bad. It's just price action is just awful. It's just really, really awful. I mean, let's see. The SMH is down 2%. QQQ's down 0.70. Let's see what the SPY is doing. The SPY is flat. We're like flat on the day. And this is showing that. You just have a lot of nonsense going on right now.
Hmm.
And to be honest with you, I don't want to tell you why. Not that it doesn't really make any difference why, but I think it's because the market's just waiting for to see how all this global stuff is gonna. I mean, our president threw a lot at the market in the last 24 hours. Okay, a lot at the market in the last 24 hours. Good or bad, it's just a lot of information to digest. And then you get pre-earnings, so you're kind of in a kind of in a wait and see mode right now. I mean, we didn't
Right.
get that New Year's rally we were expecting. We're not really seeing strong follow through beyond anything. We're just kind of drifting along like nothing really happened, like nothing changed. Um, excuse me. But
And
I
we've
do
got
like,
these big reports coming out tomorrow, Roger. We got earnings season. So, wait and
right.
see. It might be exactly what's going on.
We're just kind of in a wait and see mode right now, and that's okay. And you notice, for example, when we were moving earlier in this week, by this time I already had like 4 or 5 trades in the pit. Today I haven't given anything because we're not doing anything.
Right.
And people have to understand they can't. Folks have to stop large caps. Large caps. You have to stop trading large caps in isolation. You got to have a market. Think about this. Look. I have 6 big monitors here. Okay, 6. I have limited real estate. One monitor has the Alpha Zone Pro with the SPY, right? And the other one has a whole screen where I just have the SPY daily and intraday. Now think about that for a second. I'm dedicating 2 out of 6 big screens just for the SPY. How important do you think it is to know what the broad market's doing if I'm dedicating 33% of my large monitors to it? That's a lot of that's a lot of space. Okay?
Yep.
Follow the market, not each other. They follow the market, which means following each other. But don't underestimate the power of the SPY. And just because the SPY is not moving in your direct, understand something. If the SPY is moving either up or down, you're going to have folks offsetting trades to put other trade. You're going to have more activity, more volatility, more happening things. But when the market's just doing this, there's no action either way. So it's sometimes when the market's going straight up, you'll find some of the best shorts because people are selling those stocks to buy the ones that causing the market to go up, or they're getting squeezed. But when the market's not doing anything, it's like status quo. And when there's status quo, you're not going to have a lot of arbitrage opportunities because that's what we're doing. We're finding inefficiencies, short-term inefficiencies, folks. Understand? So think about it. Think about how, and I'm actually thinking of adjusting this and making it into one monitor, but because I need more real estate space, but for the small caps. But we're not doing anything.
Not,
Nobody's is doing anything one way or the other.
it's
We're
interesting, Roger. Rebecca posted something here that I'd like you to comment on. She says, "Is
yes.
it bad that I follow the QQQ more than the SPY?"
Yes, because the QQQ doesn't have a lot of the sectors that make up the broad market, and the market is
Right.
being driven by the broad market. Rebecca, let me explain it to you so you understand it. You see, if I just tell you to follow the SPY, you're not going to follow the SPY. But if you understand why you should follow the SPY, maybe you'll actually understand it. So right now, we are driven by algos and ETFs and arbitrageurs. The spot, all the mutual funds, right? Think about mutual funds. You have so many of these pension funds, mutual funds, and they're broad based.
Yep.
Broad based meaning they have to have the S&P in it. So for every share of Nvidia that they buy, Rebecca, they're going to buy for every 100 shares of Nvidia, they're going to buy 5 shares of Albemarle or Sienna. Stocks that may or may not be in the QQQ. You got to know where the broad market is. The broad market is what moves the market. How come I don't follow the Dow? Too small, not broad enough. Why don't I follow SMH? Not broad enough. Now, if you only trade stocks that are in the QQQ, you could do it, I suppose. But honestly, I wouldn't. I wouldn't do it.
Yeah, that's a great response, Roger.
Yeah, I just wouldn't do it. I would not do it.
And they're synonymous because many times people will say, "Well, what's the market doing?" And in my mind, sometimes I'm going like, "Well, what market are you talking about?" The default is the SPY.
It's always the SPY. Always, 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 always the SPY. That's just how it is. And I mean, I like the structure that it's building on a 5 minute chart. By the way, here are my levels from the morning. That's the high, that's the low. Look at that. Um, you will notice that we're staying within these levels. my levels work really well when the markets are choppy because we remain focused on the previous areas that we've hit. Algos. This is algos. So anyhow, so far we're respecting our levels. I would expect us to either stay here for a while between 690.28 and 689.24, or if we break out, I'm expecting a good move outside of here. Okay, I'm expecting a really, really good move. Anything. I trade QQQ and Tesla more than anything. Watching them since I started. Yeah, I mean, just depends on what you're doing, Rebecca. If that's what you trade, Yeah, it's called a nasty consolidation. There's just nothing going on. Okay, so now a few questions that I wanted to answer for folks. Let me just put this back here about the smaller stocks. So we took a nice profit today on the small caps. By the way, Raleigh.
Oh
I think it
yeah.
was like, yeah, we took a really nice profit today on the small caps. Too bad we did not have a chance to get a confirmation and add to it. It would have been a double whammy, but we did do well. People were very happy with that. I know Richie made good money on it. Well, whoever sent me an email actually were like, hey, some people got a little slippage, but they're making out. So far, it's all coming together as we expected it to. And as the year picks up, we'll have more retail traders coming in. But again, folks, like you see right now, the stock market's not doing anything. It has nothing to do with the overall market. Think about this. If a stock is too small for an institution to buy, even for a small cap institution like Kathy Woods, she usually doesn't touch anything below 2-3 billion. That means you cannot have any anything going on that can potentially impact you. That means you can have anything going on that could potentially impact you, and you'll be completely under the radar. Peter, how much did you take a full dollar on STZ? I'm going to talk about that in a second as well. I'm going to talk about that in a minute. Pull something up here. Oh, here it is. Okay, you got a full dollar. Good. TZ. Yeah, some folks did not. So let me just really quickly talk about STZ. We did a spread in the Pro Trader dashboard. I gave you guys a bonus time spread, and it was on ticker STZ. They had earnings this morning, and I gave you guys a price of 90 cents. And this morning, I shouldn't have done it. I told you guys to change it to 1. And you guys changed it to 1. The problem is it opened at 1, but it was at 1 for so fast that I got several emails. Roger, I got 2 out of 20 filled. I got 1 out of 10 filled. I got 5. So what happened is, remember, when you cancel your order, your new order gets placed in the queue, and we lost our place in our original order. So if I told you to keep the original order at 90, I'll tell you what you would have been all filled at. You would have been all filled at 92. I know that because on one of my brokers, on Fidelity, I forgot to change the price from 90 to 100, and I got filled at the open at 92. So if you didn't get filled on that trade, please keep the trade working and keep lowering it to the scratch price. And if the price of STZ keeps coming down, and the spreads tighten, you should get filled close to your entry price. A lot of you got 95. A lot of you got a dollar, as you guys could see here. But don't overstate your welcome, because you'll be exercised tomorrow on that stock, and you'll have to cancel it. So loss with SC simply did not go our way. It went up it went up quickly. So again, some of you got filled, some of you did not get filled. Scratch means break-even price, and if you don't get break-even by, say, 230, start lowering it till you are filled. Okay, all right. So again, and part of it was the spreads. The spreads on the stock were awful. I should have just left it alone at 90. We all would have been out of that trade. All right. So that's that. I gave you guys instructions on that. And again, small caps do not have correlation because institutions can't buy them. They're too small. They're under the radar. Okay. It's like a car company it's like Ford trying to get into the moped business. It has no interest in it. You understand? It's like Ford trying to get into the roller skating business. It doesn't have any interest. So you're not going to have any problems there. Peanut, I take that that's your. I'm not going to do the forensic accounting, but I imagine you got executed at your trade price. Okay. All right. Good. Good. All right. Yeah, like I said, half of the people send me emails. Thanks for the trade. I got $1, and half the people I got two filled, and I'm still stuck in the rest. So it's one of those things. Um, yeah. All right. You're welcome. By the way, Matt, how many positions are we holding in any of our portfolios right now?
0.
What? We have zero positions?
That's right.
You mean in gap to green, true trend, A line, weekly cash flow, quick strike? We don't have any positions?
Nope.
Have we ever been in this situation before?
I don't think so, actually.
Now, can you explain to me why you and I have, and this better be a good answer. How come we don't have any positions?
Well, with the exception of stopping out of Apple, we've taken all the winners. We closed them all.
Aha! That's why we don't have any trades because we've been taking winners on all of them. I like that. That's a good answer. It's a good explanation. All right. So yeah, we have no positions right now in any of our programs. We've been taking the winners as soon as we've been getting them. Yeah, and we took Google this morning on weekly cash flow, and we're looking right now for some swing trades to take. But that's where I want to be. Walmart was liquidated a long time ago, Klein. You missed the alert on that one, my friend. It was liquidated on the 23rd of December. All right, and the spreadsheet reflects it. Okay, so yeah, you're welcome, Adam. You're welcome. People are very happy. All right, so let me start off by giving you my watch list, okay? And then I'll give you my sectors because we want to get through that today. Bear, I already explained it. You could just rewatch the video. I'm going to close the chat, Raleigh. I'll leave it up to you at this point. Okay?
Okay, got you covered, buddy.
Yeah, you could deal with the chat, but I did explain it already in great detail. Matt, do me a favor and hook me up when you get a chance, okay? All right. Short side. I'm still bearish on Netflix. Nothing has changed. Notice how it just moved from one level down the stairs, down to another, going down the stairs. And it's below the VWAP right now, which I like. Netflix, BST looks very, very nice. Very, very nice. Chewy. Don't tell my dog about this one. Now, thank you, sir. Now, Chewy, we got to be careful with because we have these high volume bars. So Chewy really has to break down a little bit more, but I'm starting to like what I'm seeing here. Need to get some volume going on Chewy. Okay. 1 second, Raleigh. 1 second. Got to take care
Yep.
of.
Are you multitasking again?
Oh yeah, yeah. Okay. So I like Chewy, but it may have to wait a little bit. I always multitask. Okay, PTSG. Oop, wrong stock. PTSG. PSTG. There we go. Public storage. In the middle of breaking the 200-day after consolidating for a while. That is a beautiful pattern right here. But it's just got to give us a little more confirmation. And I like this a lot, but it just has to go a little bit more because it can easily come back up, and that'll be the low. So we gotta make sure it means business. Although this morning, look at volume and how it picked up nicely. I'm gonna keep an eye on that one. Spotify. It's a nice setup right there. Fiverr. Very, very nice. I'm giving you guys real red meat right now. These are very nice stocks that are not overextended to the downside. It just started breaking down. GWRE. That's a nice one, too. Not overextended. Pizza. I remember this one on our short list so long. It's now breaking down again. Look at this thing. From 140 all the way down to $40 and still coming down. Don't try to bottom pick. Don't try to bottom pick. You'll get your fingers very dirty. All right. Calyx. Breaking the 200-day moving average. Look at that. After being at 70, it's now at 50, and it's breaking the 200. This thing is not having a great day. That's definitely a stock that I would add to your short list. Now, let's look at our long list, okay? FedEx. It's a nice look. Not overextended yet. Rocket. This thing looks like it could really rocket out of this world. Cost. This is more of a day trade. It's got to get above the 200. But for a day trade, this is good. I mean, it's up 4%. This stock is gapping, or it gapped this morning. It was in a gap. It's a nice little consolidation here. High volume bar going higher. I like this. I like this. General Motors. This is a nice clean breakout on volume. It's a nice breakout there. That's nice grind. Nice grind right there. That's a nice looking stock right there. Okay. Key, another really nice stock. Really, really nice looking stock. Folks, I'm giving you real red meat right now. Okay. I'm giving you very, 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 very good red meat right now. Yeah, all my short picks looked amazing, and all of them. And the long ones are looking fantastic. LUV, love. It's definitely getting some love from the bulls here. It's got a nice little... It hasn't broken out yet. You got to keep an eye on it, but here's your high volume bar. Got this little area here, and then you got a nice potential breakout, especially if energy prices keep going down, and they will. Did you guys hear... we don't know how long we may be there. We may be there for a long, long time. I love it. I love this Venezuela thing. This needs to pull back a little bit. I would, or if not, just flag here for a few more days. But I like this QXO. UPS. UPS is looking fantastic right now. Fantastic. APLD. Looks like it's on the move. It's still above the VWAP. Look at the volume on this thing. It's a nice volume follow through. I mean, earnings follow through. It's got great volume today. The SPY's just, look at this. The SPY's just keying off the VWAP, doing absolutely nothing. Okay.
And Roger, that does bring up a point where we're talking about holistically what the market is doing. Yet despite that, we do see individual opportunities on stocks that are either outperforming or underperforming the SPY that still look good. So you're not saying, guys, don't trade. The SPY is moving sideways. You just have to be very, very selective and
extremely
look for those.
Selective.
Yep.
And well, not only that, you have to rely a lot more on volume.
Yes.
You have to rely a lot more on volume, because Here's the problem. If the SPY is moving really well, it's going to give you that tailwind.
Yeah.
If the SPY's not giving you the tailwind, you're going to have to get it from somewhere. Otherwise, you're just going to get into a stock and it's just not going to do anything.
You bet.
That's why so I've been giving folks in the pit, I've been giving them a lot of these, I call them scalps, quick trades when the market's moving. And all of them, one of the common denominators on all of them is they have unusual volume that day. If they don't have unusual volume, not unusual volume activity, unusual volume that day, they have higher than normal volume. If a stock doesn't have higher than normal volume, I'm not going to day trade that stock.
Right.
And for swing, see, it's tougher with swing trades because swing trades, you're trying to hold a stock for several days, and it's very hard to predict if there's going to be volume on that stock in 3 days from now. So it's not as significant, and also you'll get much better price on a swing trade when volume is lower but on a day trade, you need that volume, you need that wind. Something has to carry your something has to carry that say that.
Yeah. It's got to generate its own momentum. It's got to have its own thrusters. Yep.
Exactly. Right. If you don't have that, what are you gonna lean on? You're gonna have a very low probability. This is what you're gonna end up with here. This is what you're gonna end up with right here. This is what happens when you're day trading without volume. This turns into this. Mm-hmm. It's the nicest way I could put it. Jason said that's the biggest thing I look at. Exactly. Volume. Stop looking at all your fancy indicators. Just look at volume. Okay. Yep. I'm telling you, volume.
And so, Roger, another question that's asked while you're going through this is that are you looking at these as swing trades or day trades, or does it depend?
It just depends. For example, if for example, let me give you a good example. Like take this stock, for example. Okay. Take Costco, for example, okay? It's breaking the 100-day moving average. The volume has been picking up now for several days. As a matter of fact, right now, let me just see what it is. Volume is 159. Look, volume is 159 times what it is. Volume is higher than usual by at least 159%. You could see that right here, right? Okay. So the stock is obviously, this is clear. Look at ATR. This is a clear sign that the stock is being accumulated by institutions. There's no question about that. Now, let's say I'm looking for a swing trade. Would I look at this stock? No, I wouldn't. Let me explain to you why. I wouldn't look at this stock because, first of all, it's below the 200-day moving average. I would never, ever, ever swing trade a stock below the 200-day moving average unless I'm looking for a target of the 200-day moving average, and I don't do that very often. The stock has been going down. Do I ever swing trade stocks that are going down? No. But let's say I'm looking for a day trade. Also, well, I was going to say it's a little deviated. Here it's not, but here it's starting to get a little too deviated from the 8-day AMA. So I just gave you 3 reasons why I would not swing trade. Why I would not swing trade the stock. It's too far away from the 8-day. It's predominantly going down, and it's below the American flag. But let's say we're day trading, and let's say we're only day trading, and we're not day trading where we may end up with a swing trade, wink, wink, at the end. We're just day trading, okay? Well, I'd probably buy this stock because I know I'm going to be out before the end of the day, and it's a beautiful looking momentum today we're having on it, and you got pretty clear skies up to here on this stock. You don't have any high volume bars. And truthfully, you don't really have any resistance till the 200, which gives us a lot of upside. So my point is, a stock that I would look to day trade may look slightly different than a stock that I'm looking to swing trade. But if I'm looking to take a trade that may end up being a swing trade, forget it. It's gonna fit that swing trade criteria. Does that make sense? So let me just start this from. Let's just assume we're trading in the pit, and we're going to talk more about the pit in a minute. But a lot of folks asked me to do a class on the pit, so I'm gonna do a class on the pit for you guys today. And then we're gonna finish up the small cap tomorrow on Friday. So if I am looking for a trade, generally speaking, I'm going to look and assume that trade is going to be a swing trade. And my position size will be about 3 times bigger than if I'm day trading. Okay? All right. Now, for that trade, I want the perfect setup. I want a setup that looks like this. Okay? That's a perfect setup right now. I don't know if there's volume in it. And for a swing, it wouldn't be as relevant, but that's like the perfect setup right now. You have a beautiful flat area. You have a nice breakout. You're literally at the 8-day EMA, and you're going straight up. I can't really find anything wrong with this. Maybe I'm jaded somehow. No, and it's at an all-time high. Okay, this is about as perfect setup as it can be. Okay, I'll take this for a for a day trade, but if it doesn't work out, this is a beautiful. I'll take it for a day trade, but if it doesn't work out, it's a beautiful swing trade. See what I'm saying?
Yep.
But if I'm only day trading, in other words, if I'm scalping means I'm just it's a yay or nay. Like 20 minutes, half an hour, if it doesn't go my way, I'm out. I'm just going to get out. I'm not going to wait for any stops to get it. I'm just out. Then I don't mind doing stocks like Costco. If they have a nice look to them and if they have really good volume to them. They have to have really good volume to them. And they have to have a lot of overhead clearance. So I want to make sure folks understand the difference between a day trade that could potentially be a swing trade and a scalp. Okay, very, 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 very different. So if it's something really quick and punchy, this is a good look. But if I'm looking to possibly hold overnight, this is more of my liking.
So
and
Roger,
yes,
yeah.
yes.
So I think the thing is this: when people are going, man, we love that you're sharing these watch lists for us, but these are not specifically swing trade watch lists or day trade watch lists. These are stocks that are setting up, and you're looking for something that might trigger your decision to get into it, and that
Yes.
decision may be a day trade, like early in the day, or if it's later in the day, it may be a swing trade. And these are things that you cover every day, day in and day out. Like you said, this is like a soap opera that we watch every single day. And
Yes.
people need to know that Roger does not segregate his watch list. Here's my
No.
day trade watch list. Here's my swing trade watch list.
I do segregate my small cap watch list, as you know.
Yep.
That's a whole different world. That's like on a. So whenever we talk about, here's just so you guys know, just for a little terminology, okay? If you hear me use the word MOMO, MOMO, it means small caps. If you hear me talk about momos or small caps, momentum momos, that's what they're called. That like scalpy stock momos. It's just a term of art. If you hear me use momo, that means I'm talking about the small caps. If I'm talking about small caps, that means anything else that I've been talking about, the SPY, none of it's like
forget about it.
It's like I'm talking about an uncle in Germany or something, and I'm in Australia. Like it's a different world. It's a different world we live in. Okay, so you can't come to me and say, "Well, Roger, you said in the morning video that the market's going to be choppy, and then you gave us 3 small caps. Why did you do that?" Because they're not. It's a different planet.
Right.
They don't speak the same language. So if you hear me saying Momo, this only applies to Momos or small, that's a small cap stock. They have no correlation to the market. Everything else I do has all the correlation to the market.
Good.
And folks, if you want to be a professional trader, you need to learn how to trade everything. Because what if we have another COVID? Those small caps are going to be running up like crazy. Okay. And so you got to trade what's in front of you. You can't trade what you want to put in front of you. It doesn't work that way. Okay. All right. So this is a great overnight stock, but this is not a Momo stock. This is one of the largest companies in the world. So it's definitely not a momentum stock. This is a good large cap type of trade. This would probably, Matt and I will probably end up putting this. Well, earnings are in less than 20 days, so maybe not. But I like this quite a bit. I really, really like this quite a bit. Here's another one right here. This stock right here. Another stock that I really, really like right now. ACN. Very, very nice. Very, very nice stock. Breaking the 200 coming up. Now it's above the American flag. Okay? Google is still actually. Let's take a look at Google. We got rid of Google today, and I still like Google. The problem with Google, it's getting a little. It's getting a little overextended. Getting a little, not there yet, but it's starting to get a little overextended. I'd prefer getting like yesterday would have been a perfect time, and it was the perfect time because I went long Google via bull put spread and weekly cash flow. So I did exactly what I'm talking about doing yesterday. I actually did it right here. But today we're a little overextended. Remember, this is a large cap, and mags haven't been doing that well. Why do you want to buy a stock that's in a sector that is not that's very vulnerable right now when it's overextended? You don't want to do that. See, you don't want to do that. We all made money on Google. It was a good trade. I mean, it was like 30 something percent for 24 hours. But so folks, context. Everything has context. Now, I want to go through the 20 sectors, okay? 20 sector ETFs. Let me pull them up real quick. I have too much fun with you guys. So here they are, just so you understand what we're going to be looking at right now. We're going to be looking at this. Hey, Matt, can you open the door about a foot? It's been warm here last 2 days. Either that or I'm running hot. Warm, okay. All right. Yeah, that's it. Perfect. Okay, that's good. Okay, these are the sectors. I'm just going to move this to the left of me, okay? I'm going to move this to the left of me, and we're going to look at it on TC2000, okay? So we're going to look right here. Make this big, this small. All right. XRT, retail, which is the number one sector right now, while bonds are going down. We have a breakout on retail. That is probably the nicest thing that we could be seeing right now. I think we're going to break out here, Matt. I think we're going to break out here.
That too.
Yeah, I think we're going to break out here. Anyway, this is very nice. This is very, 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 very. As a matter of fact, the retail usually right after Christmas or around Christmas is what causes that rally that we have. Okay. Yeah, I like this market here. IWM, also interest rate sensitive. It's making higher high. That's very bullish for the market. Very, very okay. That's very nice right now. Very attractive. Small caps are definitely leading right now. Look at that. That's very nice. Very attractive. Let's look at SMH. Not so attractive. Not so attractive. Coming to the 8-day. Doesn't really mean anything, but they look at this run that they've had. A little too much. They need to cool off a little bit. Okay. XLB looking fantastic. Look at that. High volume bars every day. This is a lot of strength right there. XHB home builders. You would think with interest rates with Russell and retail, but no soup yet. No soup. Still below the 100-day moving average. Once we get past the 100, this thing will. Once we get past right here, this thing should move right here. Right here and right here. This thing should move. How about GBTC? Not looking all that. Bitcoin is still stuck in that channel. Still stuck in that channel. The boot, remember the Italian boot rally?
Yeah.
Remember that? Look, it just keeps building.
Yeah, there you go.
Now the boots are too small for the foot. The foot is the toes are starting to stick out right here. This is a foot, and that's your leg right there. Italy. Oh, I got to have a little fun with you guys. Mid caps, MDY. They look fantastic. Again, very, very much tied to the Russells. Okay. XLI. Industrial is still near all-time highs. This is a little cool off, but we're still near all-time highs. By the way, let me finish this stuff, but I wanted to check something here. I wanted to check the the number of stocks making 20-day highs right now. 279 right now. Not 500, 279. Go back. Okay. All right. Next is healthcare, XLV. Beautiful. Blue chips seem to be looking better than tech right now. Continue. XLY. Consumer discretionary. Look at that. Folks, retail and consumer discretionary is breaking out. That's very, 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 very good. It's a very, very bullish sign for the market. Let me look at the old Amazon real quick. Oh, Amazon is looking great. I'm going to put a little alert here for Amazon.
Yeah, not surprising.
Nope. All right. All right. That's very nice. Very nice. Very nice. I like what I'm seeing. I like what I'm seeing. XLY. We already talked about XLY. XLE. Energies. Look at that. 3 days up, then down. Now keying off right at the 8 and the 15. I would say a lot of uncertainty right now. XLF. Look at that baby go. Near all-time highs. Look how it keys off the 15. Look at that. It's very important. Very important. I don't have the chat open right now, so if you guys have any questions, please Raleigh will ask me later, or just give you the answer.
Everything's going very smoothly, Roger. People
Perfect.
really are appreciating this.
All right, fantastic. The Dow is looking beautiful. Like I said, small cap. The only problem right now is I'll show you where the troublemakers are. You know, there's always a troublemaker. XLP, there's one troublemaker, consumer staples. They've been troublemaking for a long time. XLRE, real estate, including commercial real estate. XLK, not doing what we wanted to do. I think this is going to be a big turnaround sector this year. By the end of the year. XLC, the sector that was holding number one place this whole year for 2026 is now second to the last spot. And utilities are breaking the 200-day moving average. Okay. All right. And just FYI, I want to add to that on a daily chart, we're keying off of the 8-day EMA, which is a very, very bullish. That's where institutions buy around here and sell around here. So this is pretty bullish sign for me. I like what I'm seeing right now.
Right.
All right. Now, do we have any questions before I go on?
Sure, we do, Roger. Several just popped in here. One, which is just weighing on people because we understand that eminently the Supreme Court is going to rule on tariffs. Yes. And I know from your perspective, you believe legally that Trump doesn't have a leg to stand on. The question was this: if a ruling comes down, I guess it depends on what the ruling is, how will that impact the market? Where would you see the most immediate impact?
Oh, that's a great question. I would say consumer goods, consumers, retail consumers.
And of course, it depends on what they rule. So let's say they rule that you cannot indiscriminately apply tariffs. You can do them with a rifle, but not with a shotgun, which means that some of those may have to. What happens? Money goes
prices
back.
Of consumer, Amazon's going to skyrocket. Retail stocks are going to skyrocket. Could be a reason why they're going up now. What do I know? I mean, the market's never wrong. But the market doesn't know anything ahead of time. Look, I'm going to tell you this right now. And Kevin Hassett will tell you what you want to hear, Glenn. Listen to me. We have a thing in this country. It's called separation of powers. Our founding fathers wrote it when they wrote the Constitution. Presidents, my friends, come and go. Constitution in this country does not. if the Constitution wanted the president of our country, and I'm not being political, I don't care who the president is, to have that power, it would have given it to him. It didn't do it. It didn't give it to him. And by them saying we can do it other ways is just showing the court as evidence that this is not an emergency. So that's something Kev shouldn't be saying. All right. Listen to me and listen to me good. All these other ways, they're all illegal. Congress has the power to make this happen according to our Constitution.
Right.
Our Constitution. And I'm done talking about this. And I've been saying the same thing since the day the president got elected. Okay? And that's the end of that. And I don't want to get into a long, heated discussion about them. And that's how the balls bounce. Okay? And by the way, the two lower courts have agreed with me so far. And the feedback from the Supreme Court when they were listening to the oral arguments were like, what the fuck are they talking about? Right. It was like, did they not go to law school or something? The judges were like looking at themselves going like, did you guys not read did you miss the con law classes? So no, this is totally legal. This is like somebody telling a math professor that 2 + 2 = 5. That's the equivalent of this right now. And that's all I want to get into right now. Okay. Literally, that's if anybody here went to law school, the equivalent of doing this is equivalent of you trying to explain to the professor of math that 2 + 2 = 6 or 5 or 10 or whatever. And that's the bottom line. All right. Whew. Sorry, folks, but I mean,
no. It was a fair question, and Roger, and it is tough because it has so much nuance to it. Another quick question came in from several people that were wondering, we've looked at the sectors here. What are your thoughts on gold and silver at this point in time, Roger?
Now,
do you have a moment to look at those?
Yeah. Well, I have a moment to look at them, but I looked at them before all day, and I'm going to tell you something about gold and silver, okay? I'm not a silver specialist. I don't look at silver. The reason I don't look at silver is because gold and silver are highly correlated. So whatever gold does is it's kind of like
it's like big brother, little brother.
I was going to say it's like looking at Nvidia and then looking at SMH. Do you really need to look at SMH, or you could just look at Nvidia, right? I mean, so I don't really look at silver. So if you guys ask me about silver, I'm not an expert because I just don't look at it. But I do look at gold, and I could tell you that silver and gold are doing exactly the same thing, and I'm in big favor of both of them right now. And I'll tell you why I'm in big favor of all of them. Because Bitcoin is no longer a safe asset. It's now part of our economy. It's now the same hedge funds that buy Bitcoin ETFs. So Bitcoin is no longer that wild cowboy. So people are going back to gold for safety and stability. China has a lot of gold. A lot of countries are buying gold. All this stuff our president is doing, whether you like it or not, and I'm not going to get into any of that at all. All of the things our president is doing is creating a lot of global uncertainty. Now, maybe the end result will be great. I don't know. I can't predict the future, but I'm going to tell you right now, when you have a lot of global uncertainty, which we do right now, gold is a very, very good asset. And I really like, I really like it a lot. Okay.
Excellent, Roger. Well, those were the points that I had. I know we have a number of things to cover, but people, I do monitor the chat, and periodically I will feed these to Roger, but I don't want to give him constant interruptions so that he can maintain a train of thought, if you will, on his presentation. Nice job, Raj. Yeah, my pleasure. And folks, please don't think like he's just being in a passive aggressive way. He's being political. No, I'm not. I'm talking legally. I'm legally speaking. I went to law school. I actually earned a law degree. I'm qualified to speak on these topics. I hang out with a lot of lawyers. I've always have. All my friends are lawyers and dentists. I don't know why, but like I've been in that world for all. Yeah. I don't know why. All my friends are dentists, chiropractors, and lawyers. I don't know why. I not intentionally, but I have a lot of friends that are in those professions, and we talk. And my wife is in the legal profession, and my wife's best friend is the attorney that's defending Uber right now. She's the head attorney on that case. I'm in the know. I know. I still remember con law. I have photographic memory, folks, and I don't remember learning anywhere in there that the president has power to do any of this. Okay, so that's that. All right. So silver and gold. I think silver and gold is looking really good right now. I like silver and I like gold, and and by the way, I'm not the only one. Here's the thing about gold and silver. A lot of banks in the last couple of months
have been doing a lot of positive PR around gold and silver. I don't know if you guys have noticed it or not,
Sure
but
they
there's been
have.
a lot that what they do that they do that for the reason of they buy it themselves and then they kind of try to spin it and make other people buy it. That's what they do. But it's very in right now. All the big institutions right now are holding gold, accumulating gold. We're not in this period. We're not in this period right now where it's like what like we were 25 years ago. Gold? What? Why would you want to own gold right now? No, this is like a Renaissance era for. That's what I'm trying to say. This is like a Renaissance era for gold, and I love it. And I've been telling you the same thing for a long time that I'm loving gold. And by the way, a few weeks ago, I had dinner with T-Buzz, and he's also very bullish on gold. And Jeff Smith is also very bullish on gold. And Jeff Smith actually he knows his commodities very well. So just FYI,
He
just some
does. That's his specialty. Yeah.
yeah. Like folks, one thing about me, I don't talk out of my ass. I don't do that. If I don't know something, like ask me a medical question, I'll be like, "What? I don't know." I ask you guys every time something hurts. I'm like, "Hey, is this? What do I do? Where do I go?" I'm useless, but I do know a couple of things. I still remember the basics of law, and I know how to trade. That's about it. That's where my expertise begin and end. I'm not a lawyer, Ron. Ron, I'm not a lawyer. I never practiced. I went to law school. I amateur half of my classes. The day I graduated, I said, "Thank you, my parents. Here's my diploma. I did exactly what I'm going to do. Now let me go about my business." Because by the time I finished law school, I was already trading full time for years. I started trading 3 weeks before law school started, like maybe a month before law school started. I applied to law school. I got into trading, and then I got accepted to law school. And I always finish what I start. And law school was the best thing that I've ever done. But I've never, ever, ever in my life wanted to practice law. Even when I started law school, I did it because I wanted to be a business guy. And that's exactly what I did all my
But your
life. So
parents loved it. They said, "My boy's going to be a lawyer."
they did. They loved it. My mom. Let me tell you something crazy. Something crazy, okay? This is crazy. I've never told anyone this. So let's see. I graduated in 1997. In 2006, I'm building a house. I'm building a house on the most expensive street in Beverly Hills, Roxbury, where Lucy, like a block away from Lucy Arnaz, where Madonna lives, 607 Roxbury. They lived on the 1000 block. I'm building a $6.7 million house. My mother comes to me and she says, "Are you sure you don't want to practice law? You could still change your mind and practice law."
And you're going, "Mom."
I'm like, "Mom, really? Like, really? Like, really?" Anyways, folks, we're going to talk about true story. True story. My mom really wanted me to be a lawyer. She really, really wanted me to be a lawyer.
I can see that. And folks, we're getting ready now to move into a promotional segment here where Roger is going to be focusing on the trading pit. He's going to be sharing a lot of information there. And for those of you that are on YouTube, we need to close YouTube at this point in time because we're not allowed to do promotions on YouTube. So if you're in YouTube, please come over and join us in the Zoom room. If you're already in the Zoom room, you don't have to do anything. You're in the right place. Just stay here with us. And this is a terrific presentation that Roger's about to go through. So, folks, I'm also going to be monitoring the chat here. And Roger's going to be going through this presentation. I'll answer questions as they come up in the chat. And those that I can't, I'll feed those to Roger.